Recession history says this is where we finish in 2022 and 2023. Recession warnings are growing louder on Wall Street, but the global economic crisis has already hit many people and companies. Just ask Gina Palmer, owner of She Salon on Atlanta's bustling Northside Drive, west of downtown, where she usually finds her store bustling with customers. On that day toward the end of the previous month, though, nobody was there but the staff. Her customers worried about being able to pay for summer programs for their children, despite rising food and gasoline prices now that school is out for the summer. Well, welcome back to Finance Insights. Well, we'll get into the details without any further ado. And before we begin, make sure you subscribe to our channel and click the bell icon so you don't miss out on any of our amazing videos. And let's begin! So in times of financial strain, personal care is often the first item to go, according to Palmer. Many of my clients have gone from seeing me once a week to twice a month, and those who saw me once a month are now coming in every 6 weeks. Abby Marshall, the landlady of the Buck Inn in rural northern England, is likewise struggling to keep up with rising expenditures while being 4,000 miles away. Since it is double the Bank of England's goal rate of inflation, she considered a rate of 4% to be prudent when she did the pub's books last year. Now, though, it has risen to beyond 10% and is trending upwards from there. On her menu, Marshall has hiked prices 4 times, and a pint of beer has gone up in price by 3 separate amounts. For many, like Palmer and Marshall, the standard definition of a recession as a period of 2 consecutive quarters of economic contraction is meaningless. Economists at Goldman Sachs Group Inc. have calculated a 30% chance of such a downturn occurring in the United States in the coming year. In the same time frame, a Bloomberg economics model predicts a 38% possibility, with the danger increasing after that. Yet many people experience it as though it were already here. According to a study conducted by Civic Science earlier this month, more than a third of Americans are of the opinion that a recession has already begun. So-called misery indexes, which combine unemployment and inflation rates, highlight the fears of small company owners, consumers, and others. According to Bloomberg Economics, the U.S. indicator is currently at 12.2%, which is on par with levels seen at the outbreak's onset and after the 2008 financial crisis. Comparatively high scores on related metrics are also associated with the United Kingdom. Consumer confidence in the United States has hit a decade low, according to the Conference Board. The mood of OECD nations has been declining for 11 months in a row, reaching its lowest point since 2009. According to Alliance SE senior economist Ludovic Subran, people are growing poorer. It's not a recession, but it sure feels and smells like one. Is there a specific reason? Rising costs for basic commodities like food and gasoline are having a devastating effect on household budgets throughout the world. In response to the inflationary upsurge, central banks are raising interest rates, which puts further pressure on those who already have significant debt loads. Strikes have broken out in several nations as a result of worker complaints that their payments aren't keeping up with the cost of living. Simply put, individuals are seeing their money evaporate rapidly, and they are concerned that the situation might quickly worsen. Concerns about economic growth, not just this year but into 2023, are piling on top of the inflation crunch. Because of this, the term stagflation has been bandied around to describe the potentially disastrous combination of low economic growth and rapid price increases. The scenario is very different from what was predicted for 2022 and beyond. Instead, there's a general lack of optimism and a predominant theme of decline. The OECD lowered its global growth forecast for 2022 to 3% last month from 4.55%, with even weaker growth expected in 2023. The World Bank revised downward its economic outlook and sounded a danger signal. Markets are also a source of concern, with the S&P 500 falling by more than 20% from its January peak, and the stock's Europe 600 has fallen by almost 19%. There is a possibility that a recession may become self-fulfilling, where fear will cause consumers and businesses to dig down or reduce spending in response to the steady flood of warnings and gloomy news. This would reduce consumer spending and exacerbate the economic crisis. Decreases in U.S. consumer expectation gauges of 10 points or more from either the University of Michigan or Conference Board surveys are predictors of recessions going back to the 1980s, according to a 2021 paper co-authored by Danny Blanchflower, an economics professor at Dartmouth College and former BOE policymaker. This year, the Conference Board index has dropped by over 30 points. There is now greater potential for a recession to trigger itself, and this may happen as soon as the first quarter of next year. Fear about the future may induce consumers to draw back, which in turn may cause firms to hire fewer people and spend less money, even while both personal and company finances are healthy. A recession is defined by the National Bureau of Economic Research as a large fall in economic activity that is spread out across the economy and lasts longer than a few months. Typically, such a proclamation wouldn't be made until the midst of or even after a downturn. There is still much back and forth as this happens. Executive Chairman of Deutsche Bank, AG Christian Sewing, agrees with the forecast of global recession provided by experts at Citigroup Inc., which puts the probability of recession at 50%. Chairman of the Federal Reserve Board, Jerome Powell, has acknowledged the probability, but not the certainty, of a U.S. recession. Economists at Morgan Stanley forecast a slight recession in the Eurozone by the end of 2022. Away from that bickering, companies and consumers are worrying about their budgets and trying to figure out how to keep their heads above water amidst mounting pressures. With post-COVID demand rising, inflation was already on the rise in 2022. After years of relatively moderate inflation, the globe was suddenly confronted with surging prices as Russia invaded Ukraine and oil and food prices skyrocketed. In the United States, the average cost of a gallon of gasoline hit $5 per gallon last month. Few people have been able to avoid feeling the pinch as basic necessities like gas and groceries have increased in price. Cowboys at last month's Rodeo de Santa Fe in New Mexico's capital city sweated more about the expense of gas than riding a 2,000-pound bull. President Jim Butler attributes the decline in contest entries to the rising cost of driving. Whereas farmers and truck drivers may pass on rising gasoline prices to customers, the Cowboys don't have it, he claimed. China's zero-COVID policy and lockdowns, coupled with a real estate recession, have put the world's second-largest economy into a spiral. Tian Lejun, a floral owner in Beijing, shut down her 2 shops at the start of the year. She had found employment as a salesperson at a posh medical facility, but she was left off in May. She has resorted to selling flowers at booths in community complexes and has cut back to only buying basics in order to make ends meet. No one can make any money these days. Just paying back my loans, my rent, and keeping myself fed is all I can afford right now, Tian stated. Put all of your money towards saving and forget about going out. Many people also have to make difficult choices about their day-to-day expenses, such as whether to pay the power bill or buy groceries. According to Tesco, a UK supermarket giant, customers are buying fewer goods and switching to store-brand alternatives to common purchases due to rising prices. If the pandemic and its aftermath followed a K-shaped curve, then the next decline may follow a similar pattern. Years of wage stagnation, according to research by the Resolution Foundation think tank in the United Kingdom, have left low-income households brutally exposed to the cost of living squeeze. The fact that Phil Story has recently served as the chief executive officer of the Hammersmith and Fulham Food Bank in London is further proof of this. His business has been booming, while food costs have risen by nearly 9%, driving up consumer demand. In spite of relying on government assistance, we're seeing folks who are on benefits but solid financially, people who really know how to budget, suddenly come to us, Story said. Even working folks, including those on zero-hour contracts, are in need of aid to get by. At the buck end, Marshall raises a similar concern as she tries to balance protecting her income with not driving away customers. The price of products is increasing at an alarming rate, therefore I have to charge more, she explained. But at what price would I be considered unprofitable? Does going out become so expensive that it's only for the better off? And that's it for today's video, guys. We sincerely hope you enjoyed it. If you did, please click on the like button and make sure you share it with your friends and family. Hey, thanks for spending time out of your day to watch our video today, and we'll see you in the next one. Have a great day.